Ladies and gentlemen, welcome back to another episode of Apex Investor. Today's daily update for March the 29th, Monday. I have to say this straight away. This sideways action with AMC and GME is a bunch of BS. This is not how stocks trade if people are really buying and selling. This reeks of hedge funds, uh, ladder trading. I forgot the term, but anyway, doing their stupid thing that they always do. And today's range was 1009 to 1076. Like, really, you really want us to believe that uh, people are buying and selling, or at worst selling? No one is selling. Let's just face it. After hours, it's up what, 0.29. This is a rocket ship about to take off. Uh, all signs are pointing to this happening. They're just trying to just wait us out and see if we're gonna bite, as in, are we gonna sell? And nobody's selling. We're gonna just sit tight and wait. And a lot of, the art of war says, don't even make, be silent to the point of nothingness, that your opponent will not know what you're going to do. We're telling them straight forwardly, very bluntly, we're not selling, we're holding, we're buying the dips. So, I mean, the only possible conclusion to that is a short squeeze. And that's what's going to be happening as long as we all buy and hold and we don't sell, not until the squeeze happens. You can see the volume. I'm even going to talk about that. It's just, again, it's manipulation, ladder trading. I forgot what the term is. Just escapes me right now. And yeah, I think that's all we have to say about AMC. Again, this is for resistance. Like I was saying on our weekend update, the support is very strong, $9 and under. If you want your entry point, it's $9 and under. And if you are going to day trade it, if that's up to you, $14 and up is what you're looking at there. So for GME, looking at GME, there are no value picks. It's only GME and AMC. That's all we're talking about. Till the squeeze happens, I really don't see any real value picks. There are no real value picks until something really, shows up and destroys everything, and doesn't look like that's happening. GME traded 173 to 193. So again, a bunch of BS. You really think we're gonna believe this, huh? Short sellers, you think we're gonna believe this is actually being sold? No, I'm not that stupid. We're not that stupid. Maybe the first time around you fooled us. This time, no one's fooled. Nobody's getting fooled, especially with all of the research we have, all of the DD, all the data, all the statistics, everything, all the behind the scenes things going on in Twitter with BlackRock, Vanguard. They're on our side, and we've got some King Kongs on our side. This is a bunch of BS. So, I'm not going to believe any of this. To me, this was a write-off. Today was a write-off until the short squeeze. Even if this was $500, it's still a write-off. Not until I see at least $1,000, and then 10,000, and then 100,000. You're not going to shake us at all. So, you know what? That's it. That's all for that. I'm just going to go to Reddit now and see what we've got. This in from WallStreetBets, a possible GME catalyst incoming tomorrow. Recall in October 2020, there was a deal between GameStop and Microsoft, and the stock saw a spike in volume and price. Let's look at what may be nothing or might be something massive tomorrow. So GameStop has an interview tomorrow discussing their future with the same firm they had the interview when they announced the Microsoft deal in October 2020. So this announcement includes the following stocks and their ticker related to tomorrow's announcement. Here we go. Get ready. Amazon, Walmart, and Best Buy. This could be something massive, or it could just be a nothing burger. So we'll see what happens with that. Okay, here's an interesting tweet from AMC stock. Volume today was 37 million. Let that sink in. The last time we have less than that number was January 7th, and the price was at $2. This proves that margin calls are starting to take into effect on hedge funds, and looks like this might be the calm before the storm. So we'll see about that. Okay, I'm only reading this post because I think it's important we temper our expectations. This poster is saying we have to be realistic, and I don't disagree. I think we have to have realistic expectations of what a short squeeze will look like and what it will look like once it hits that peak and then starts to dip. We saw that in January where uh, GME went up to 480, AMC went up to 20. So with that in mind, realistically, 480 is realistic. $20 is also realistic too. However, we know those weren't the actual short squeeze prices. So GME in a short squeeze will look like $1,000. AMC might be 40, 50, maybe even 100. It's hard to say until we get to that point. So I just wanted to temper our expectations and not just go, oh, 2,000, 10,000, 100,000, because we've been saying it. We've been posting it. We've been talking about it. But for that actually to happen is another story altogether. We have to temper our expectations with reality and with how, as much as I hate to say it, with even the technical analysis with the graphs, although lately it's been a bunch of hedge effery, they're just effing around with it. So we know that it's not really true. Those numbers, those prices are psychological. So we just have to sit and wait and hold. And, whether that catalyst is either AMC or GameStop, their board of directors doing a share recall, or doing a dividend, or something similar to where the shares would have to be called back, which would in effect eliminate all the fake shares, the naked shorts, remains to be seen. Okay, I need to justify what I just said about realistic expectations. It's not to put a damper on the short squeeze, because the short squeeze is going to happen. We just don't know how high it will go. I can't predict that. I can only throw some numbers out. Anyone can do that, but no one really knows until it happens. What I'm trying to say is these are stocks. No matter what we do or say or post or what anyone says or posts, they remain stocks at the end of the day, AMC and GameStop. So they are subject to the rules of the stock market, meaning they will go down and they will go up. But in terms of where are the real sellers, where are the real buyers, well, we'll know that when we see volume, like real volume, way above the average that they've both been getting. So, you know, if you're one of those people, I'm not saying it's good or bad, but if you decide to, let's take GameStop, and you bought 100 shares, and you decide to sell at 500, and you made a profit, you know, all the power to you. But if you wait and hold until 1,000, you sell then, even more power. I mean, it's really a battle of attrition, of patience, to see who will be the most patient, who will not panic sell. Uh, that's what it is. Okay, so let's read this tweet from Josh. It says here, this is huge. The squeeze is coming apes. I woke up and couldn't believe my eyes when I saw Credit Suisse in headlines this morning. I'm in shock. Credit Suisse has reported a margin call for one of its hedge funds. Why am I in shock? Well, guess who the number two dark pool trader is off AMC? You guessed it, Credit Suisse. So that's pretty big. Let's look at the next. I think it's another tweet from the same person. It says here, not guaranteeing anything. I present info with a paper trail. I just find it no coincidence that Credit Suisse, a top dark pool trader for AMC, specifically week of January 25th, with 29 million shares, is in headlines for a US hedge fund who got margin called last week and defaulted on it. And we're thinking that most likely it is that, anyway, one of those hedge funds that had to liquidate. Okay, so let's move on to GME. There's a lot to read there, I'm sure. They have these ape commandments. I'm going to read two that I particularly liked. It says here, I will embrace FUD as a sign of moving or the stock's moving in the right direction. That's a really good one. Um, and number 10, I will give back to the community once this is over. Very good. Okay, moving on. This first post from GME says, we can stay tarded longer than they can stay solvent. And it's proven true because Citadel was already forced to make S-rated, I almost said the word, S-rated BBB bonds for 600 million liquidation. We heard about other hedge funds liquidating. So sideways trading inflicts the max pain theory on short hedge funds, countering their hedging by keeping them neutral to make them bleed out even quicker, unable to profit off GME volatility via options both up and down each. Okay, I'm going to read this post. It's talking about the YouTuber Andrew Mo Money. Uh, I have to give him credit because not only am I cataloging a lot of the DD on the subreddits, WSB, AMC stock, and GME, but he is too. So he's getting attacked because he's saying things people don't like. And you know what? People have their own opinions. That's okay. I have my opinions, and you know, I think I have to be a little better in regards to, you know, setting ceilings and how high things can go. Because to be honest, I really don't know how high both these stocks can go. They will go where they go. They will be where they will end up. So I can't say whether that's a million or 100,000. I don't know. When we get there, we'll see. So I think we're just gonna leave it at that. Having just read that last post, I never realized that not only am I covering the important DD in all these subreddits, you know, AMC stock, WSB, and GME, but I'm also I'm cataloging them. I'm archiving them without even realizing it. So, you know, I always thought that my videos, you know, ones from a week ago, 2 weeks ago, and all the ones in the past don't really matter until you get somebody who's new to this, who's just investing in AMC or GME, you know, whether it's tomorrow or next week, and they want to get all the important DD, do their, you know, due diligence, get all the important data, the actual facts regarding what's going on, what's actually going on. And I've got a lot of it. And maybe Andrew Momani has some too. I don't know how much he has. I don't really watch his channel. I only watch Trey's Trades and Uncle Bruce. So you know what? Uh, this is all good. It's all good. So this post says, let's compare 9 ETFs containing GME today. They're all down. That's that's the conclusion. So let's go to the. This is actually really big news from GME. We know that GameStop is expanding their repertoire to not just sell consoles or video game consoles, things related to that. They're also venturing and expanding their reach into the PC P gaming. So this headline says GameStop start selling GPUs and immediately sell out. That's actually pretty big. That's showing that it's not only they don't only have a lot of potential, that it's happening. Like it's actually working. So that is massive. Okay, let's go. So this person is deciding to leave the subreddit and just stop checking the GME ticker. I think that's a very big that's a no-no. Don't do that. You want to stay on top of these things. If you really are a good investor, you will watch the news every day. I'm not saying you panic and be glued to your TV every minute. I'm saying you're going to check in at least once a day to see what's going on. That's what I'm doing. And in terms of the ticker, you already know your price, whatever that is. If you think it's going to 100,000, you know, by all means, set your price alert at 100,000. But if you're a little more realistic, like I am, I set it at 1,000, 2,000, 3,000, 4,000, 5,000, all the way to 10,000. You know, next is 20,000, 30,000, up to 100,000. You could do it that way if you like, and then 100,000 to a million. But keep your alerts on. be blind in this if you really want to be successful. Otherwise, you're going to miss this gamma squeeze and then the short squeeze, the MOASS. Don't miss it. Do not miss it. Okay. Next post. Okay, so here's a warning that we're being attacked by the shills, by the hedge funds to they want to villainize or vilify all the people posting DD, especially Hates Pixel and Warden Elite. Don't fall for that. Whether they say, and they haven't, but whether they say, the limit is 1,000 or 10,000 or a million, it doesn't matter. The important point to remember is they're on our side. They want the short squeeze to happen. Everyone has their own opinions. Everyone has their sell point and their buy point. They have their price targets. So, I have no problem with anyone setting a price target. That's fine. That's their opinion. Doesn't mean they're right. You just have to disagree with them and just move on and just hold to the point where you think it's going to stop and then start dropping. Okay. Let me look at the next post and see if it's worth reading. This post is very important. It's saying there is a massive number of puts in open interest for April the 16th, the same week as DFV's call options. They are equivalent to 70% of the float. This is a monthly options date, so the shorts probably filled these up before the January squeeze when they thought they could bankrupt GME. Either way, you can see they are really hoping for this rocket to abort launch. So yeah, April 16th will be a huge day. I'm not saying that's the only day it's going to happen, but we still have to be aware and watch what will happen as a result of maybe before the day or after the day or the days afterwards. But that is a very big date. Very big date, April the 16th. I think that's a Friday. Okay, this post is called Actual Must Read. A hedge fund dies and GameStop lives. So this is the recap. Banks are scared. The market is super nervous. It is also on the edge while they figure out how screwed the hedges made things or how bad they made things. Loans could be called back soon. GME is stable. GME is heavily shorted. Loans getting called back means shorts are forced to cover. How does that sound? To temper expectations here, however, arch egos could be isolated, could be an isolated event. There were a few big stocks they had huge portions in, and so far it doesn't seem to be more widespread, but we don't know that yet. So this doesn't mean the squeeze will start squeezing all over, squeezing just yet, but it is another piece that is going to contribute to further uh, potential squeezing. Additional goodness to leave you with. I have said before, the current price of GME is based on the possibility of the e-commerce shift, but it won't go much farther without details of what that shift will actually be. Well, there's a third bridge forum. It's a meeting tomorrow, an interview tomorrow, I should say. If they give us substantial information about how they will be transforming, this could kick things into high gear. Again, a news catalyst. It wouldn't even need to squeeze if it actually convinces Wall Street of the potential. Seriously, I've heard estimates of $600 to $1,200 a share for a proper e-commerce transformation. And I'm sorry to bury the lead. I don't know what lead is, but this could be big if it is substantial and convincing. We shall see tomorrow. I am not a financial advisor. Okay. So I think that's all for that one. Okay, here's a simple to the point post. You see a boring day, and yeah, it was boring. Traded sideways. I see stability at a potential new floor price. These are great things. And that's a good point. Moving on. So this might be one of the biggest news items of the day from an sorry, can I rewind? NSCC filing today. And this is actually insane. So this is the TLDR. The National Securities Clearing Commission, partnered with the DTCC, has filed this document today. So basically, these two groups are the ones who are stuck with the bag of poop when the hedge funds come to them and say, we have to cover. So they filed this document today. Many parts to this document, but one part, for example, was to clarify the plan of what would happen if the S hits the fan. So, in their words, the plan is intended to address the risks of uncovered losses or liquidity shortfalls resulting from the default of one or more of its members, which are the hedge funds. Number two, the plan identifies tools that may be used to address foreseeable shortfalls of the NSCC's liquidity resources following a member default. And three, the plan's goal is to maximize resource availability in an evolving stress situation, to maintain flexibility in the order and use of sources of liquidity, and to repay any third party lenders of liquidity in a timely manner. Four, the plan supports an industry effort designed to prepare carrying broker dealers for an emergency mass transfer of large quantities of customer accounts and assets from a distressed broker to a financially secure broker. And last, five, next section is on the tools that can be employed by the NSCC to mitigate losses and mitigate or minimize liquidity needs as the market environment becomes increasingly stressed. I could go on, but then it wouldn't be a TLDR. But I will just say there is no way I can cover this entire document in a TLDR. If you want the full perspective, uh, read it when you have the time. So, does it mention GME? No, it doesn't. Uh, so check yourselves. It could be unrelated, but we should all take this data into account and the context. He's only posting information, and I'm not a financial advisor or expert. Anything I say or do, I cannot be held liable if you incur losses or whatever you do. What you do is your choice. So the first comment nails it. It says, it looks like they are preparing to mitigate damages and they fully expect the entire DTCC to be drained. This is going to be a squeeze thicker and hotter than that. I'm not going to say it. Okay. We got 3 posts maybe. We'll see what we've got. And here's our regular friendly reminder, do not set dates. We don't know when the squeeze will happen. I don't know. Nobody does except God. But when it happens, it happens. And it could take a month, could take 6 months, could take a year. But when it happens, and it's going to happen. Okay, let's look at the next post. We're going to end it with probably the most important post of all today. This is all the DD you will ever need. You don't need to trust anyone or anything else, not even me. Believe in the stock, in this trade. The thesis has not changed. This is from DFV. I'm going to put this in my watch list to watch tomorrow. Let's just watch the first few minutes and see how it goes, see how hype we get.
Video of the kitty corner, and the market has kind of forced my hand on this one. The first stock that I'm going to talk about is Gamestop, and I know it's a polarizing stock. Some people won't even tune into the stream right now when they hear that I'm bullish on Gamestop at the current price point. It's trading about $4 right now, $260 million market cap. And most of these kitty corner videos, I want them to be shorter, like 1 minute, 5 minute, 10-minute max. I want them to, so that way it's just a quick intro into my thoughts on a stock. But this GameStop one, it's going to be a little bit longer because I have a lot to say about it. I could talk about it for weeks. I'm going to try to keep this as short as I possibly can, but I have a lot to say. I'm also hoping maybe you can catch some of my blind spots if I have some, poke some holes in my thesis and share it with me, because yeah, I think everyone else is crazy and I think I'm right, but I've been wrong plenty of times in the past. So I'm going to upload this and maybe you can share your thoughts with me, but yeah, let's dive in. GameStop. Okay, here we are. So like I said, this video is going to be a little bit on the longer side for a kitty corner video. So if you drink, you might want one of these for this. It's July 2020 right now, and I'm bullish on GameStop at the current price point of about $4 per share, $260 million market cap. I've been adding to the position the past couple weeks. It's been trading below $4 per share, and it's now the largest position in the Roaring Kitty model portfolio. So, yeah, I have a lot to say about it. I've been tracking it for a while. I know it's a divisive stock, so definitely share your thoughts with me on this, whether you agree with me or not. I'm curious to hear. And because I have so much to say about this, I had to put together this Word doc just to help guide the conversation because I'd be all over the place because without this guidance. So I tried to just focus on what I consider the more important aspects. And just boil it into a single Word doc here. But yeah, we'll just see how this goes. But before we kick things off, some recommended reading. In fact, I can save you the trouble of watching this video because my bull thesis has already been covered by so many other folks. I'm just sharing with you my viewpoint, but every aspect of my thesis, people have already talked about. So if you read these things, these recommended things, you won't need to watch this video. So if you check out Scion's letters to the board and just their commentary on things, Scion, that's Burry's firm. They had to file a 13D this year because they took a position at the time greater than 5%. And within that 13D, I have it pulled up. They included all their letters, all their communications with management and the board and so forth. So if you pull up that 13D at the SEC website, you can look through all the letters all in one place. You could get these elsewhere too because they were press releases, but I kind of like having it all in one place. So check out those letters to the board. And also because there was the board vote back in June, they shared their opinion on GameStop back in June. So this is their latest viewpoint at the time. They still, even though they were below 5%, they still had 4% position, which is a good sized position. But they shared their latest view. So this was as of June. This was only a month ago. So Scion still seems fairly bullish on this. I really like Burry's letters because they get right to the point so quickly that the whole thesis is right here in this latest, maybe not just this letter, but the whole thesis can be found in just these letters. He does a great job of communicating his points so succinctly. But anyway, I bring this up because that's his latest commentary on the company. And besides Scion, you'll also want to check out, what I said, Hester and Permit's letters and their Restore GameStop presentation. So Hester and Permit, I think they own like 7-8% of GameStop right now. The activist investors, they were the ones trying to get board seats. But they've had a number of letters back and forth over the past couple years now. But they check out those letters too. They have a lot of thoughts and good thoughts on GameStop. And they also have this Restore GameStop presentation. This is from May 2020, where they put together this presentation to try to help them to share it with the investors and so forth, help them get the board seats. But it's like 80 plus pages. Like, how much can I add to an 80 plus page presentation? Not much. I'm going to reference this a couple times in this video, but check out this presentation because a lot of the thesis is covered right here. And then, yeah, so let me just pull this back over here. All right, so that's some recommendation. Also, the Seeking Alpha articles. I think I have it open here. Seeking Alpha articles. Yeah, sometimes you come across a company, there's not that many articles written, or the ones that are written just aren't that good. GameStop has a number of really good articles out there, and I'm biased. You don't need to tell me this, but in my opinion, the bullish articles here, the bullish authors, they seem to be more attuned to reality than the bears, I think. Maybe you disagree. That's cool. Let me know. But I think they seem to be more the security analyst type. This is going to come up later in this video, but check out the articles. A lot of the stuff I'm going to say, it's already been covered here. So that's what I mean. I don't have much new to say. I'm just sharing my viewpoint. So check those out. But yeah, I think that's just about everything. Some recommended reading. So you read all that stuff, you probably don't need to watch this. But if you are going to watch this, let's keep moving forward. So like I said, there's a lot of aspects of it, a lot of moving parts of this bull thesis, but I boiled it down to just what I consider the three overs. Digital risks seem to me to be overblown. The negative sentiment is overdone, and the value is overlooked. In fact, I think the GameStop stock is, it epitomizes value investing. It's like value investing at its finest because it's such a classic case of value investing. We'll get into it later. I don't want to spend too much time on that, but it's just a classic value stock.
Okay, sorry to pause it there, but I just something about DFE here just resonated with me. It's not just his presentation, his personality, but he knows his stuff. Right away, I can tell this guy knows his stuff. A lot of YouTubers, I can see right through them. You know, Uncle Bruce, he knows his stuff too. Trey's Trades, he knows his stocks. He's got really great picks, without a doubt. Uncle Bruce knows the stock market. I don't know about his picks so much yet, but Trey has a proven record. DFV, obviously, he's the guy that really jumped on GME uh, really early. So to be honest, I have my own picks like Lucid, uh, Vaxart's another one, and QuantumScape. Nintendo, obviously, right there. You see them in my bottom, the logos. But I can't wait to see what his next pick will be because whatever he says, and hopefully it comes from, I'm not saying he's going to be bought out, but I mean, I hope that he doesn't get bought out in the future. He isn't taking a bribe or anything, but I really don't know. But hopefully his next pick, he will reveal it to us and we're all going to jump on it because he has the insight. He has the foresight. This guy, he's got it, and I can't wait to see what his next picks will be and what his next video will be. That's not GameStop or AMC. I don't know if he's ever presented an AMC, but to see, what he sees as the next big opportunity. Because as much as I'm an Apex investor, this guy is like the ultimate Apex investor. So let's continue watching. I don't know how much we can watch. Hopefully, this isn't copyrighted or anything. So here we go.
And I think that's why it's so polarizing, in my opinion. But okay, so let's get into the digital risk overblown. So this transition to digital, I think it's just much slower than what's being priced in. It seems to me that it's been happening over time. I do think it's inevitable. Like if we're looking out 50 years, 100 years, we don't need to have a discussion because we're on the same page. Everything's going to be digital. I just don't think we're there yet. And this is meaningful because 2020 is when the consoles are coming out. It does matter where we are today and where we'll be the next couple of years. You can't just say we're going fully digital, so that's the end of the discussion. And I think that's what a lot of people are doing. I'll touch on this later too, but people just go digital is the future, so there's nothing to be had here with GameStop. There's no future. But I don't think we're there yet. I mean, it's transitioning much slower. I have some web pages pulled up here so I think I try to. Let me just keep on going with these bullet points. I'll just list them before I start pulling up some other websites. But people just say, I mean, physical discs, they still remain a good sized chunk in 2020. That's part of what I'm getting at. I also think in-game purchases, they're kind of skewing some of the figures that people are sharing. Like they'll share some figures, which I'll show in just a sec. If they're saying this is what percentage of the market is digital right now, but I think those in-game purchases are kind of affecting that. I'm not certain, but that's okay because I'm a value investor. I don't need to be precise. And then why discs. But before I get to why discs, let me just share some of the things. So if you Google like physical versus digital, you're going to come across this Statista webpage. And like you see stuff like this, and maybe other people are, and you see, I highlighted this part in contrast, only 17% of video games were sold in physical form. And you see figures like this, and you see the trend too. If you look at the trend over the past 5 years, it looks really alarming. And so people see this and they think, oh man, GameStop's toast. But I think there's just some misunderstanding with that data. I think a lot of that, like I said, is in-game purchases. I think the actual outright purchase of discs is still relatively high. And I have, let me just see what other page I got up here. So to counter this, there was an article in May 2019 by Wedbush Securities. I mean, maybe they're biased too. Maybe they're bullish on GameStop, but they talk about a number of things that like kind of counter that point that everything's going digital. Like sales of the FIFA game was still 75% discs in 2018. I don't even know the accuracy of that. I see the report that they're citing, but this is the thing. You're going to see lots of data, and as an individual investor, it's hard to know what's true and what's not, what's accurate. So you kind of just got to read a lot and try to get a feel for this type of stuff. And so check out this article. It was in Variety. Check this out because they kind of counter a lot of this stuff. Whether or not you fully agree with it, that's another thing, but just read it. And then there was another thing here too in GameIndustry.biz where they talk about, this is more European focused, where they're talking about certain countries, what percentage is digitized, what percentage of games purchased are physical. And so look over this. I don't want to review the whole thing. That's not the point of this video, but just check out these sources where this was 2018, 2019, it's 2020 right now, and the trend is clearly going toward digital. But this is my point, is that you're still seeing some countries that are still heavily skewed to physical. And I don't think 1 year later, all of a sudden, everyone's going to be buying digital. So that's the thing, is because these next few years are critical for this GameStop thesis. And so if there's still a good chunk that's physical games, GameStop sells other stuff too, but the software itself, those used games, what everyone's focused on, because that generates a lot of free cash flow. That in particular, yeah, I just check these articles out. Now I know I'm rambling a bit, but I got to keep going to keep this quick. What else did I have up here? Oh, and then so there was this article's from June 2019. It was an interview. It was on The Verge, but they were talking to the Xbox boss Phil Spencer, and so this, I'm like trying to piece together the story as to, that's what I mean. It's so hard to know exactly what these numbers are, how many people are still buying discs. So I like try to look for stuff that piece together the narrative. Um, and so Phil Spencer was saying, I want to give, this was last year, I want to give people choice, and right now physical is a choice that millions of people love. So this is the Xbox, Phil Spencer, and he's saying this last year. That should be meaningful to people. When you tell me no one's buying physical anymore, if Xbox is saying this, or the people in charge of Xbox are helping lead the charge of saying this, like, you should pay attention to that. And if you remember back in 2013 when they were rolling out the Xbox, there was some confusion over the console, and they kind of messed up a bit. And then they wrote this blog. I forget the story itself, but they had to say like this. They had to walk it back. You told us how much you love the flexibility and so forth. And with games delivered on disc, they had to start offering the disc version, or start trumpeting that even more, because people wanted that. I get it was 2013. It's changed during this console cycle. I get that. It's not lost on me. I just mean that Xbox kind of realized that they're like, all right, people still want these discs, and I still think that's the case today, 2020, to a degree. Maybe not as much in 2013, because it has indeed changed quite a bit, but it is still relevant. And was there anything else I wanted to point out? I had a couple of web pages that I pulled up. I showed that. No, that's it. That's it for this. Oh, and then just the general physical versus digital case. Now, because it's July 2020, the consoles are coming out, you're going to see a lot of YouTube videos of people debating this. Should they go physical or should they go digital? And there's a lot of good videos out here. And in particular, Fanta, I haven't seen all your stuff yet, but from what I've seen so far, you have a lot of good thoughts on this. I mean, I know you're not a security analyst. That's what I mean. A lot of people are voicing their opinions. You have a lot of spheres crossing paths here, like gamers and so forth. And I agree with a lot of stuff that Fanta is saying here, but he brings up a lot of good points. But then, and also these other ones, he's got a couple videos too. There's a whole number of videos out here, and everyone seems to be leaning a bit more toward physical when you watch these things. I just find that interesting. Like, why you hear digital, but then you see these videos and people kind of talking more about the benefits of physical. But you can find it both ways. You can kind of find whatever you want to find in here. But in this video, I brought this one up because this gentleman, he's leaning more toward digital. But then you check out the comments, everyone starts talking about the disc version. I want the disc version. Just about every comment. Maybe not every single one, but this is what I'm trying to piece together that story, right? So when I see stuff like this, I just find it interesting. All I'm trying to figure out as a value investor is does there remain some demand in 2020 for those discs, because that's important for GameStop's free cash flow generation. So look, check this stuff out for yourself. We're not going to watch these videos right now, but I just encourage you to check it out yourself if you're trying to build your own thesis around GameStop. And then, so why discs? Preference, console storage, trade value, download speed, sharing. I don't even need to. It's covered by the Restore GameStop presentation. What we're getting at here is that there's still consumer demand for GameStop's offering. So let me pull this over here. And let's just scroll down just a couple. This is, what is this, slide 80, I think. And just GameStop retains mind share with customers. Now, this is all quoted from one single survey. So this is the stuff I look at. Where are you getting this data from? Is this demand legitimate? And this is what I mean. I'm not basing everything on this one single data point. But this is the stuff I like to see as a value investor, because I just need to make sure that GameStop isn't going bankrupt, in that people are still buying discs, and that there are still demands for GameStop for just a couple of years. Because if that's the case, GameStop is likely undervalued. So the point I'm just showing this is that GameStop, there's still interest for some or many of its products. And then digital downloads have slowed share gains over time. You can see this chart too. Check out this presentation, right? But I'm just trying to make my point there that it's not over yet. In 2020, it's not over yet. 2030, maybe it will be, but not yet. Anything else here? Oh yeah, so this is a list of I've kind of put together that list. It's you can see this here too. So it's interesting that people are downloading games isn't lost on me, right? Because I have friends, I have family, and they think I'm crazy that I'm bullish on GameStop, because many of them are downloading games. And so that's the thing. You got these anecdotes, you're talking to people and so forth, and maybe I feel like most people watching this are probably downloading games. I think GameStop might serve a different target customer, where not everyone has an Amazon Prime account. I have that up. What is it like? Yeah, what 112 million members Amazon Prime as of December 2019. That's not everyone just thinks, oh, you just buy it on Amazon, that's it. And but like not everyone has an Amazon Prime account. Some people do want to shop at brick and mortar. Maybe they want this. I'm just listing stuff that's already here. They want the trade in value. They want these things. And that's not to say that you have these things or you want these things and so forth, or that these are an issue for you. Perhaps they're not. I'm willing to bet that they're not, because if you're in a situation where you're watching this video, then yeah, it just depends. I don't have time to get into all that right now, but yeah, so that's why I think digital risks are overblown. I still think physical is here for at least a few more years. In particular, this console cycle, I still think it's going to be relevant, and I think that physical disc version is going to outsell the digital version. Let me know what you think for the new Xbox and PlayStation consoles. All right, so the next one is, let me move this back out of the way. Negative sentiment is overdone. So this is some of the heaviest negative sentiment I've seen with the stock. Just about, I mean, there's just so many different ways people are negative about GameStop, about its stock, about its future business, and so I just jotted down a couple just for fun. These aren't all true exact quotes people have said to me, but haven't shopped there in years, or my friends haven't shopped there in years. You can download everything. Digital's the future. GameStop's the next blockbuster. That's a popular one. People just, they say, oh, GameStop's a possible investment. They go, oh, no, that's the next blockbuster, and then they just move on. They go, that's the end of the discussion. That no one wants to look under the hood. The terminal value is 0. With the poor managerial decisions, they like blame past managerial decisions as a reason not to invest in GameStop. Brick and mortar is dead. Anything brick and mortar is a bad investment. So Amazon, that's the end of the discussion. Just say Amazon. Anyone, if Amazon can compete with you, then you're dead. And then the pandemic. So there's some legitimacy to some of these things. I'm not saying that these things are all ridiculous. I'm not saying that. I'm saying that it's just so much of it that I think that's a part of the reason that it's weighing on GameStop stock price so much in July 2020, because it's really heavy. It's really heavy to get out from underneath that. It's a reason, part of the reason you see such heavy short interest as well. But I think this has led to an opportunity. That's what I think. But yeah, so just so much negative commentary. I just think that this sentiment is so negative that it's overdone. That's what I'm trying to get at in this section. And also with these GameStop bears, you read some of these articles or some of the commentary on this, and I think people, because they themselves, this is what I was trying to get at too, they seem to falsely impute behaviors to others. Like they themselves might not be customers at GameStop, or if they have bought physical discs, they have the ability to resell it on eBay or something like that, or they just download everything. And I think what happens is the people who are opining on GameStop as an investment, they're the loudest, right? But they're just not customers, or their friends or family aren't customers too. And when that happens, they I don't know, maybe they're not digging deep enough, or maybe I'm wrong. I mean, I might be wrong about this too, but I think people are thinking that everyone else behaves the way that they behave. And I think that could be a mistake in this case, because from what it seems to me, that there are still people shopping there remains demand, and just because the people talking about it don't have it doesn't mean it's not there. I think this is my thesis. You're welcome to tear it to shreds. Feel free. I encourage you to. Please comment on this video or talk to me on the live stream about it, because as you can tell, I'm really curious about this. And also, many of the people who are negative on GameStop, they don't seem to be security analysts. And some of you may think that may not matter, but it does. Like, this is the opportunity for like a value investor, is that, yes, I'm analyzing a business model, right? I mean, that's important. For some people, that's all that matters. But when you're analyzing a security, like you can have, I don't think GameStop's terminal value is necessarily 0, but even if it were, that doesn't mean GameStop's a bad investment right now. And I think that's lost on some folks because they're not bona fide security analysts. And so if, let's say you've been right about the industry the past 5 years or so, maybe you're just a gamer, or an investor who's just reading some of the headlines, and you see the trend towards digital, and you're kind of like, all right, this is probably inevitable. But you don't start looking under the hood. You're not looking at the balance sheet. You're not looking at historical free cash flow margins, or what to expect in the future, or something like that. And I think if you're not a security analyst and digging into this stuff, it gets lost in you. That doesn't mean the security analysts are always right. We make mistakes, and we might be wrong on this one. But when I see a bearish, say, Seeking Alpha article out there, and I read through it and I think, no, this isn't like security analysis to me. You're not telling me the things that I want to hear. If I were trying to build a bearish position on the stock, then I think, all right, then that's something to be wary of. I perk up a bit. So yeah, that's it. That's just this negative sentiment just seems so heavy, and I think that's why we're where we are today at sub $4 in July 2020. Whew. That's surprising me. Maybe earlier this year and last year and stuff, but so close to the console refresh, that's something. That's something. Okay, so then finally, value is being overlooked. I think. Oh, I would like to keep this all on the same page. I need a drink. I'm just going nonstop, you know. Um, all right, so because of these like first two things, I feel like no one's looking under the hood. I already said that, but there's a lot of things that are happening fundamentally that one could be excited about, myself included. So, like, there's a new board of directors, there's a new management team, and so that's what I mean. People criticize GameStop's historical decisions, their poor acquisitions, and so forth, and maybe yeah, poor operational decisions, whatever it is. But it's like, all right, cool, yeah, that's fair. But we have a new manager team right now. Not to say they're going to hit it out of the park. That's not the point. The point is just that it has changed. And so far, I have to say they seem somewhat competent. I mean, they just got Reggie to the board too. I feel like that's big. But then you got Sherman for the management team. He's only been here just over a year. He's just getting started. He needs a little bit of time. I know Barry, he voiced his opinion on the new board seats, and he wasn't in favor of Hester Permit. I kind of get that. I don't. It's a marginal impact on the bull thesis. It's okay that Hester Permit. They seem like they know they got their finger on the pulse. I don't think it makes that big of a difference, but I kind of get where Barry's coming from because it kind of feels like management's been doing some good things over the past 12 months in the right direction. And we'll get to some of this stuff as I work through this bullet point list. But I just mean so far, from my from it just looks like they're competent, they're doing the right things. And as a value investor, you need to see that, because if they don't, you kind of need stuff to go. You need a lot of stuff to go right. I don't want to say that, but it's just an important element of this type of a thesis. And one of the ways they've been showing that they know what they're doing, or they're seeming competent, is they've been cutting costs. So they talk about cutting costs. It's one thing to talk about it, and one thing to actually do it. They seem like they're doing it. So they're cutting costs. In fact, part of what I want to do here during this video is I want to review some of the fundamentals. And we'll get to this, but I just want to review a couple more things as I do this. Sorry about that. They've got reducing cost of goods sold, so it seems, identifying the stores, testing it, improving working capital management. A lot of people talk about this, but they seem like they're actually doing it. They can make better capital allocation decisions. You can see them selling assets, actively testing stores. They're not making any dumb acquisitions. Like you like this just stuff that it demonstrates to me that they could be on the right path. That they could be. Like when you're selling assets, like in this year, when it's a tough year for GameStop, and they're selling the jet, doing some sale leaseback, things just to generate a little bit extra cash. That cash goes a long way right now, and of course testing the store, that feeds into longer term things, right? But this stuff's important. And then improved flexibility they have right now because of the refinancing. They extended the maturities and they got rid of some covenants. Like I'm listing a whole bunch of things here. But like, not enough people are talking about this stuff. This is what I mean. Like, the stock price, it's gone nowhere for 12 months, but the fundamental events that have been unfolding are like objectively positive. They've been incrementally improving, and that the price is still flat is surprising to me. They have adequate liquidity now to get through the console refresh and for a potential turnaround. It might be still too early to that. When I say potential turnaround, I mean like revamping their business model to be like they could be here in 20 years. Right now, I'm not sure about 20 years, right? Not many people are. But they might have enough liquidity, especially if they get to the console refresh and can generate some extra cash. They might be in a good position, tough call. But definitely enough liquidity that people talk about GameStop going bankrupt and stuff. If you're saying GameStop is going bankrupt, you need to show your work on that one, because I don't see it at all. Highly unlikely to happen. It's hard for me to take those types of theses, that type of a thesis seriously. So I'd be wary of that. Anyway, GameStop still remains highly relevant too. They got $6 billion in revenues at the tail end of a console cycle. They have $1 billion during the latest quarter, Q1. Look at this. This was they had to that were dealing with the pandemic, end of a console cycle. They literally had to close their doors, and they still generated $1 billion in sales, like $1 billion. And then I talk to my family and friends, and they go, "Yeah, no one shops there anymore." I'm like, "How you do $1 billion? How you do $1 billion?" And anyway, I know free cash flow is what matters, but still, that's telegraphing to me like people still shopping here. And yes, everyone will focus on the year-over-year declines, right? Yeah, let me drink a beer here. But it's just that sheer level that sticks out to me first. Yeah. So let me get back to this. So I like to see it. 6 billion in revenues is legit. That's a good size. That's a good size. Sometimes you come across a company, it might only be like a billion in revenues, 2 billion in revenues, 2 billion in revenues, especially like a retail company. And I think, all right, well, is it going to fall off a cliff tomorrow? And you might say GameStop's revenues are currently falling off a cliff, but if you're still at $1 billion right now with a new console cycle on the way, that that that's legitimate. And yeah, 6 billion is a good size. Is good size.
So I'm going to pause it there, and I'm going to watch the rest of it offline. I don't want to infringe on DFE's content. I think this is about just almost halfway. So, with that, I'll just end it there. And thank you very much for choosing Apex Investor, for your views, for your likes, for your subscribes. If you haven't yet, please let YouTube know that what we're reporting here, what we cover on this channel, is not only important to you, but it's important that other people find out as well, especially those who are shareholders of both GME and AMC, because there's a lot of media manipulation going on. There's a lot of disinformation being spread. So we're one of the few websites, or not websites, I should say YouTube channels, spreading the truth straight from the people, from those who are the retail investors. And I myself hold positions in GameStop. That's the number one stock in my portfolio, and I won't disclose how much and what price I bought, but we'll just end it there. So thank you very much for your time. Stay tuned for tomorrow's update. I thank you very much for your time, and may God bless you and your investments. This is Apex Investor signing out.